Cesar Mortgage Broker. Today we're discussing a cost of waiting analysis. Now, I wanted to add what's called the 2-1 buy down, and if you've seen my previous video, I've talked about the 2-1 buy down. But what really is the 2-1 buy down? The 2-1 buy down is really a temporary buy down. What does that mean? Well, we know in situations where we're in a high rising rate environment, we know that the banks tend to come out with products that are going to help, the situation. So they must know something we don't, right? Because they're coming out with these products, and for some reason, they always come out when we're close to a recession or we're already in a recession. So I wanted to provide this analysis so it can provide clarity, so you can explain this to your clients if you're an agent or if you're a potential borrower and you're thinking about making a purchase, so you can understand the program and realize that this is a great opportunity to take advantage of, and you can make the best decision based off this analysis that will help you with that. So what I did is I put together an analysis that's going to show you the first 2 years of the 2-1 buy down, and I also provided a column that's going to be called the cost of waiting. And last but not least, you're going to see the price and seller credit. Now, the price and seller credit, it's really what it's trying to explain is that in this market, I'm starting to see not only price adjustments, but also, offers getting accepted at 50 to 100,000 less than what the sales price is. So that's huge. So that's why it's a great opportunity right now to take advantage of, because as you're going to see in the numbers, it actually makes more sense to purchase during this time right now, because there's a lot of fear in the market. There's a lot of the media is playing a huge role on, buyers leaving the market and not trying to buy today. Now, one of the things that we're going to look at here, you're going to see in the 2-1 buy down that the first year, you're actually using a seller credit of up to 3% to buy down the first year by 2%. So if technically we're at a 6.99 with FHA programs, that's your standard rate, you would be able to buy it down by 2%, meaning that you would be at about 4.99%. And your payment would be $51.53 with 57 cents. The second year, you're going to be able to buy it down by 1 year. Same thing with those same 3% seller credit. So now your rate's going to go down by 5.99% because it's only 1% that goes down, and your payments will be $55.97. And if you were to actually do the price and seller credit, where you can actually adjust the price by asking your agent to send an offer at anywhere from 50 to 100,000. This scenario is 100,000 less from the 715. You're paying at a 4.99% interest rate, saying that you're looking at the first year of the 2-1 buy down. Your payment will be $44.53 with 76 cents. Now, let's look at what's going to happen once the buying frenzy begins again, because we know that prices are not going to stay like this forever. We also know that because we're in a recession, rates are subject to fall. So once it catches wind, the masses start knowing what's going on, we're going to see the buyer frenzy come back in. What happens if that's the case? Well, if that's the case, once rates drop to, let's just say, 4.4%, because that's what Fannie Mae is predicting, you're going to see the competition come in. So let's just say we're going to have 15 to 20 offers. Now you're not buying the property for $715. You're not buying the property for $615 at a price adjustment negotiating. Now you're buying it probably at $750 or more. In this scenario, it's $750. So even though you're getting the premium rate at 4.4, if you're able to compete and get this house, your payment now is $51.35.47. So when we compare it to these, it's a little bit less than your first year on the FHA 2-1 buy down, but now you're paying more for that property. And who knows, it might be even more than the 750 range. So those are things that I want you to consider and understand. Now, we can adjust this scenario and analysis for anybody who wants to see if it makes sense. So feel free to reach out to us, and we'll provide you with that personalized mortgage report. And also, please share, like, and comment. And thank you so much.